And what are like some themes or sectors that you are bullish upon as far as the Indian economy is concerned right now?
See, that way you look at it for the next 20, 30 years, both Indian consumption and Indian infrastructure and Indian manufacturing, everything should do well. The challenge is that, is it already is the valuations priced in or not is the debate that we have to have. It is not that India is not a growth story. India is a growth story. What is priced in? What is not priced in? Is there a difference between what is priced in and what is not priced in? Is there a scope to make money out of what is not priced in? Those are the questions which get us into a lot of thinking.
So, like, if we can answer those questions also one by one. So, what do you think, like, what is priced in which of the sectors right now?
No, I think, see, when so much of money comes into the market and when India is macroeconomically in the best position compared to most other countries in the world, there is almost, see, India's growth is kind of priced in. Now, what is not priced in is 1 year later, maybe there is scope for compounding. So that may not be priced in. But if you're asking me, is the growth priced in? Yes, but there is a compounding of India, no, as years go by. That may not be priced in. So that is where it is. But India is not a cheap market. India is the costliest market in the world today, along with some of the US stocks. So India's growth is priced in, but compounding may not be priced in. The fact that India could have 30 years of growth. So 1 year later, that 1 year's growth may be priced in already. So when you go 1 year later, that 31st year of growth may not be priced in. So that kind of compounding may not be priced in at this point. Otherwise, a lot of it is priced in. So I would say pre-2020, we had a market where some parts of the market just didn't go up. So we had areas where we could say there was deep value and we could buy those value. Those kind of markets we don't see right now. I mean, 6-9 months back, we used to think banking was much cheaper than the rest of the market. No, banking did well. So I would say those kind of situations are there today, that today there is so much money in the stock market that any area of undervaluation gets corrected very quickly.
So then if we talk about asset classes only, so equities, we mentioned equities, gold, silver, you're saying that all of them have given very good returns and money is there. So then what is the asset class which is remaining to a retail investor? Like where do we put money as an asset class?
See, what we tell people is you do asset allocation and aim for moderate returns.
And what do you mean by moderate returns?
See, could anyone have predicted what kind of tariff war you would have got into? Could anyone predict what kind of wars we have had in the last 3 years? There's so many imponderables. I think it is very unfair for people like us to give a assured feeling that this is the kind of return you will get from an equity kind of product. It's not correct. That's why it's not fair on our part to come and give a number. So I would say markets are not cheap enough to give a high number. If markets weren't a fear, we can give a number just to get confidence. We can give a number. That's not the situation in the market.
If you learned something new from this video, do share it with your friends and subscribe to this channel so that we can bring you the best content possible. Also, if you want to watch this entire episode, click on the link in the description box and you can go to Kushal Lodha YouTube channel and watch the entire podcast episode. Thank you so much for watching this and have an amazing day.